Hi, the stocks discussed today, which can give a gain of 40% and more, today are Chola Holding, Bala Amines, and Hindustan Copper. If you want to know more why I think these can give a gain of 40% and above, please watch the whole video where the analysis has been shared. Thank you. Hi everyone, welcome to the Mighty Trades channel. My name is Johar. Welcome to another episode of Weekend Technical Analysis. So last week we concluded our episode with IIFL Wealth Management. So let's not waste any more time and dive right in. So chart we have here is Suven Pharmaceuticals. We're looking at the weekly chart right now, and pretty interesting pattern here. So it looks like it's broken out of a small consolidation zone, which you can see here. Right, this is the low. Let's look at the line chart once. Yep. So as per the line chart, this seems to be the movement. Okay, and it's given a breakout 2 weeks back. Switch back to the candles. So as we can see, this gave a breakout in the week of 21st March, and then for the last 2 weeks has been consolidating at the top. So this is a very good sign that it's consolidating after the breakout. I think it's getting ready for a short swing movement. So if we take the depth of the entire box where it consolidated, and if we move it up here, then the potential gain that we can get is 20%. This looks like a nice short swing trade. I wouldn't mind getting into this myself. So from the current market price, if you were to calculate our risk to reward ratio, then we have about 14% target left. Our stop loss will be somewhere here, basically this breakout line, which is also the low of this red candle here. So a risk of 4.5% for a gain of 14%, not bad odds. So I'm adding this to the tracker. This definitely looks like a promising short swing trade over here. Let me also add the link to the chart. Is this the name? Sorry, it's PHAR. Okay. There we go. All right, the month is April. Today's date is 10th of April while I'm recording this video. The price is 614.55. So broke out of consolidation in March, has been consolidating above the breakout zone for 2 weeks. Which is a good sign. Okay, so our target entry price is the current market price. Our target as per the box pattern is 701 rupees. Can even go higher than that, never know. So the potential gain is 14%. Our stop loss is going to be, in this case, what is this price here? 589. So potential loss of 4.16%. We're going to mark this trade as active. and the buy date will be tomorrow, whatever price the stock closes at. Okay. Alright, great. Moving on to the next chart, which is METROBRANDS. Okay, this looks like it's recently listed. Very little chart we have available here to make any judgment. So we're going to avoid this for now. MEDPLUS also looks like a recent listing. KEC International. Okay, let's have a quick look here at the chart. Let's look at the monthly chart. Let's look at a longer time frame first to understand the history of the stock. Okay, so from 2006 onwards, all the way up till you could say 2017, it consolidated in this price range, and then it broke out, and then it waved a super move, doubled the money in a span of 1 year. Then came a steep correction. Then this was the COVID fall, again moved up, broke out of its pre-COVID high. Sorry about that. Broke out of its pre-COVID high and was strongly moving up in momentum, but it looks like it had a very deep correction in the month of March. Seems to be stabilizing right now. Let's look at the weekly chart again. So seems to be stabilizing over here for some time. Right now there is no real reason to buy. We have to wait for the stock to come back in momentum. If we switch over to the daily chart and you put all the moving averages also, the price is trading below all its moving average, especially the 200-day moving average. So we have to wait for it to cross this 200-day moving average of 446, and after that we'll have to analyze if there is any potential chart pattern based on the basis of which we can make some trade. As of now, this we have to avoid this kind of stock. Let's move over to Chola Holding. So Chola Holding listed in September 2017, went up after its listing, then came down, then stabilized over here a little bit, but then came the COVID fall, which uh, took the price from 500 to 250 rupees, so almost 50% correction there. Went up again, and it's back in this consolidation zone. So I guess we have to wait for it to give a strong close above this line. Otherwise, we could get just trapped in the stock right now. So until unless it gives a closing above 730 rupees, there is no real point of entering. But when it does give a closing of 730 rupees, this last 5 years worth of consolidation that it's been doing, right, since 2017, this entire range of consolidation will become the potential target. So if we look here, the potential target from this breakout point would be 1240 rupees. Let's also quickly take a look at the fundamentals of the company to understand if over the last 5 years the company has grown in any way at all. So let's have a quick look at the fundamentals. If we look at the net profit, the quarterly sales, those look very good, very decent. Operating profit margins is also very good. Net profit has been uneven in my opinion, but the last 2 quarters have definitely been very good. Two back-to-back quarters of good net profit. If you look at the profit and loss statement, when it listed in 2017, if you look at March 2017 numbers, the sales were 2688. Okay, let's instead this listed on, let's look at the previous high that it made. It made this high in May 2018 here. This one, 743 rupees. At that time, so let's look at the March 2018 results in that case. So at that time, the sales were at 9,000 crores, close to 9,000 crores. The profit before tax was 1695 crores and net profit was 550 crores. Now today, the sales have close to doubled. They have increased by like 70-80%. The trailing 12 months sales is 14,400 crores. The profit before tax is 2,400 crores and the net profit is 800 crores. So the performance of the company has improved by 50-60% almost. However, the share price has not, right? The share price has still been consolidating in this range itself. Let's also take a quick look at the shareholding pattern to see if there is any accumulation going on by big players. And yes, we can see that there is an accumulation happening here. The FIIs have been increasing their position since the last 4 quarters. Domestic institutions have remained largely the same. They reduced their position by 2% in September, but since then it's been pretty much stable. Public holding has also been very stable over here. There don't seem to be any big investors currently showing up in the shareholding pattern. But I definitely a positive sign that FIIs are slowly increasing their position here. And also, if we look at the FIIs, you can see some RBC emerging market small cap equity fund which has bought more shares. Toyota Tusho Corporation has maintained their holding since many years now. So all in all, a good sign. So definitely worth adding to the tracker because it's very close to its breakout zone right now, just a difference of close to 100 rupees. So when it does break out, I think there is good money to be made in this stock. So Chola Holding. Let me add the chart link as well. All right. Month is April. The date is 10th April. The current price is 648.10. Okay. So what is the analysis that we did right now? The analysis is that consolidating since the last 5 years, in fact last 6 years, if it's 2017, so consolidation since the last 6 years, companies fundamentals have improved over time, posting highest ever sales and net profit, FII holding stable and increasing slightly, and public holding is low. So these are all the good things that we spotted in the company fundamentally, and technically also. This consolidation has been going on for a very long time. It's very close to its breakout zone. If and when it does break out, it'll be a I think the stock can have a good potential to move. So what is our target entry price? Our target entry price will be 648. No, sorry, not 648. Let's calculate the position. Let me first quickly switch over to the line chart to get a better idea of the exact breakout price. All right, so 727 seems like decent price. Let me also just recalculate this again. Okay, let's put this up here. All right, so our target is here. If we take a long position from the current market price, sorry, from the breakout price, then the gain is coming to 65%, and a stop loss would be, let me switch over to the candle chart very quickly. Switching back to the line chart. So a stop loss, we would have to keep a pretty wide stop loss here. So this previous low will be our stop loss. So a potential loss of close to 19% for a potential reward of how much is it? 66% odd. Very good risk to reward ratio. It's about 1:2, so that's good. So let's add our target entry price, which is 729 on a weekly closing basis. Please note that our target is going to be, what is this, 1208. So the potential gain is 65%. Our stop loss is going to be 590. Then we are currently waiting for entry. Let me just quickly paste this formatting here. Okay, great. Wow, two stocks back to back. Very quickly, we have found good trading opportunities very quickly this time. Okay, let's move on to Tata Motors Dvr. Um, let's look at the monthly chart. So, as per the history of the stocks, made this high in 2014, came down. Then after the COVID low, the Tata Motors stock has just shot up. So this, what we are looking at right now, is the Tata Motors DVR. DVR stands for diluted voting rights. So I think over here, two stocks of Tata Motors are worth one. Tata Motors DVR are worth like one actual stock of Tata Motors. So this is very carefully linked with the Tata Motors stock itself. Right now, I don't see any reason why we should buy. If you look at the weekly chart here, it's making a lower highs and lower lows. So until unless it breaks out from this previous swing high of 259, I don't see any reason why we should enter the stock. And right now, with this high inflationary environment, I don't know how auto companies are going to do that well, because their input cost is going up. The prices of vehicles are going up every single quarter. The prices are going up by 8%, 9%. I don't know how many people will end up buying cars in this kind of high inflation environment. So I would rather avoid these kind of stocks right now. But markets can be irrational. They can have a lot of exuberance when there should not be. But it's better to avoid such stocks where you can get trapped in the future. Moving on to Castrol Industries. Okay, this stock is trading at really rock bottom levels. It's trading at a price where it was back in June 2010. So it has destroyed a lot of wealth, I think, over the last 6 7 years. Since 2014, it's just been on a downward journey. Let me look at the fundamentals to see that the price and the share price of the company is going down, but are the fundamentals really that bad? Because if we look at the ROC, it's 68%. That is crazy ROC. Zero debt company. Okay. Very undervalued to the other industry peers. That's also a good sign. Let's look at the financials and try and understand, has the business really grown since 2010? So I'm not going to look at the quarterly results. I'm going to go straight to the profit and loss statement where we see yearly results. So this price was made back in June 2010. The current price, as you can see, was also the same price back in 2010. At June 2010 levels, the sales were 2735 rupees. Right now the sales have close to doubled and are 4,192 crore rupees. Net profit was 490 crores, which is right now it's close to 760 crores. Now let's compare the performance to its all-time high levels. So in December 2014, it made an all-time high of 268. And in December 2014, the sales were 3,300 crores. Net profit was 475 crores. And again, right now, as we can see, the sales are higher than 2014 levels, and the net profit is also higher than 2014 levels. So company's performance, uh, I wouldn't say has jumped tremendously like fivefold, tenfold, but it has been consistently growing sales. Right? If you look at here, the compounded sales growth, it's been growing at 3% over the last 10 years, 4% over the last 5 years, and over the 3% the growth has been negligible because the last 2 years we were going through the whole COVID pandemic. But if you look at the trailing 12 months, it's gone up by 40%. So let's quickly just look at the quarterly results. And if you see here, the last 4 quarters have been tremendously well for the company, right? Posting sales of upwards of 1,000 crores close to every quarter, except for this one in June. I think this is the time when we had the second COVID wave in India. Margins are also pretty much stable. Net profit is also very good compared to the past. So all in all, the company's performance is very, very stable, but the share price has just been on an absolute downturn. So if you are a contrarian buyer where the share price is behaving opposite to the company's fundamentals, then you can possibly think of building a position here and maybe just holding it till its previous highs or till its all-time high. But this would be a very, very long wait. Possibly you could have to wait for 1 year, 2 year, 3 years for the share price to behave correctly in the right way. Right now, I would only enter the stock if it gave a closing above 153. Before that, it makes zero sense to enter the stock right now because it's just on a complete downward trajectory. So there has to be some kind of reversal sign at the bottom, something that needs to change. Some high volume buying needs to come over here, like how it came here, which then shot the price up all the way till here. So something has to happen. And even if you look at the RSI is also really, really weak. And so nothing really to take a look at over here. So for now, let's skip this talk and move on to other better opportunities, which are, I'm sure, available in the market. So now if we look at Hindustan Copper that we have here, okay, there's something interesting happening here as well. Let's look at the monthly chart to give us a better idea. Okay, so this is you can say a safe consolidation range. Let's switch over to the line chart. Here we go. Okay, so yes, our price levels are correct. So this seems to be a very long consolidation which this company has gone through, right? From 2013 all the way till February 2021. So close to a 8-year consolidation that happened in this price range over here. So the high of this consolidation was 119 rupees and the low was close to 1920 rupees. Right after that came a solid buying in February 2021. It broke out above this the resistance zone or this consolidation zone. Then it retested, went up again, and now it's just consolidating, you could say, above the consolidation zone or within the high of the consolidation zone. Now it's been consolidating in this price again for a very long time. Let me switch over to the line chart so we can get our levels correctly here. Switch back to the candles. So it's been consolidating in this price range since 1, 2, 3, 4, 5, 6, 7, 8. 8 months of consolidation within or above the previous consolidation zone. Now this is something I have never experienced in the past. I have not seen this kind of consolidation here, but definitely something's happening in this stock price that makes me feel that we could be in for a very very long bull run in this stock, because there's almost 10 years of consolidation behind it in this zone, and now it's been consolidating here since almost 8 months. So I think it's getting ready to launch up till here easily. Let's look at the fundamentals of the company to understand what's happening. So if we look at the PE, it definitely looks overvalued than its industry PE. I don't know why that would be the case. But let's look at the quarterly results. Sorry, let's look at the profit and loss statement directly. So if we look at the profit and loss statement, there has been no significant change over the last 10 years. Only in 2021 they posted their highest ever sales and their highest ever net profit. Right now the trailing 12 months is again highest ever sales and the highest ever net profit. Not highest ever net profit, but a very good net profit over here. These 3-4 years seem to be very good for the company, but right now this net profit over here is probably the best since the last 7 years that the company has made. If we look at the shareholding pattern, then we can see that there is no FII holding over here at all. DIIs are holding a significant stake, very stable over the last 3 quarters, somewhere between 16.5 and 17. Public holding is also stable between 15 to 17. Something is definitely happening here. I don't see fundamentally the company improving in any way, but there seems to be something happening in the chart pattern, because this is really interesting. There's a lot of volume in this area, there's a lot of consolidation here, but I think to be really sure of entering into the stock, there would have to be a breakout above this price. Let me switch to the line chart here. So this price right here, close to 150 levels, then I would be sure that there is something happening in the stock. And if it does break out, then the simple target would be this consolidation zone depth and the high. So let's put this up here. Okay, so from this level, what would be our breakout? What would be our risk to reward ratio? Let's take a quick look at that. And if it's a decent risk to reward ratio, then we can possibly think of entering the stock. So the reward is close to 45% from this price point, and our stop loss in this case would be, now as of now, this I'm just keeping a tentative stop loss of 10%, or let me just say this, what is the top of this consolidation zone? Yeah, so we can keep the top of this consolidation zone as the potential stop loss, but this would be, this right now this is a tentative stop loss, because depending on how the candle breaks out, that time we would get to understand what is a true stop loss that we can think of. So let's add this to the tracker. I think we'll have to wait many months for this trade to get activated. Nonetheless, we will add this to our tracker and we'll keep track of this position. So the current price as of today on 10th April is 122.60. So how long has this consolidation period been? 13-year consolidation. So close to a 8-9 year consolidation. So a 9 years consolidation, breakout happened in Feb 2021 has been consolidating above the breakout zone, or let's not say above, let's say around the breakout zone since the last 8 months, can potentially make a seriously big move. Also, another thing is that all the metal prices are going up because of all the geopolitical tensions. So metal prices are at all-time high. I'm pretty sure copper should also be at all-time high. So this should potentially give a boost to the share price. Can potentially make a seriously big move. All right. So our target entry price is 154. Our target is 227. Potential gain of 47%. Our stop loss will be 120. What is this? 128. Potential loss is 16, close to 17%. We are waiting for entry right now. Don't know why this formatting is not fixing itself. And this is the current market price. Okay, let's also add the link to the chart. Okay, great. So HINDCOPPER looks interesting, looks promising. Let's see what happens. Moving on to SJVN. Okay, we are looking at the weekly chart right now. Looks to me like it's a head and shoulder pattern that we are seeing. Let's switch over to the line chart to get a better understanding over here. So yeah, looks like a pretty textbook head and shoulder pattern. So this is the left shoulder. This entire thing is the head. This is the right shoulder. It broke out and it's currently consolidating under the shoulder. All SJVN is a energy company, and all energy company stock prices are currently doing well right now. I wouldn't say all companies, not the stock prices, sorry. All the energy companies, their profits have gone up massively because energy prices have gone up everywhere. So this could potentially be a trigger and take it up to its all-time high levels. As you can see, this target that we're getting here is the all-time high. Let's switch back to the candles. And if this stock were to break out from here, then the stop loss will be this previous low of 27 rupees, which it's been maintaining for the past couple of months now. So our position sizing here would be, this will be our entry price on a weekly closing basis, and this will be our stop loss right here. So a potential gain of 29% at a risk of close to 7%. You could even choose to take the stop loss down till here, so that's a personal choice. I will personally keep it at this zone of 12 of close to 7 or 8%, but you could also hold out till here also if you wanted. So that depends on your risk appetite. I don't want to get trapped for a very long time in the stock because the history suggests that it takes a very long time to move up, and it makes extremely wild moves, as you can see. So 7%, 7.5%, 8% risk is what I'm willing to take at this point in this very weird market that we are in right now. So SJVN is looking good. April, the price is 28.90. Head and shoulder pattern. Energy prices up. Target entry price will be, I think it's already very close to its breakout level. So yeah, target entry price will be the same as today, so 28.90. Target is close to the previous all-time high, which is 37.65. Our stop loss in this case will be 26.95. You're waiting for entry. That's the current market price. Is the name not correct? There we go. Okay. Moving on to Zydus Wellness. Deep correction, no real reason to buy right now. Better to avoid. ZENSARTECH Technologies. Let's see here. Looks like it made a double top pattern here and then moved down. No real reason to enter right now. Asahi India Glass looking pretty good. Let's see here. So it broke out from its all-time high. What's this? Yeah, it broke out from its all-time high in the month of November, moved up very quickly to 600 levels, crashed down again after this whole Ukraine-Russia thing, and has again now moved up above this level. Definitely looking very promising, because the consolidation behind this entire fall, as you can see, has been very large, and the stock has struggled to go up again here and it just fell down again. Let's look at the fundamentals to understand if there is a good fundamental reason also for the price to move up. Okay, so ROC is 11, not that great. Debt to equity ratio is pretty high, 72% debt. Not a good sign also. Let's look at the sales. Sales are stable quarter on quarter. No major change here. Margins have improved, which have led to improved net profitability as well, as we can see here. So this is the highest ever net profit it posted back in December, in the December quarter. If we look at the all-time high that made in September 2017 of 436, the sales of the company in March 2018 were 2,633 crores, and right now the prices right now the sales are at 3,000 crores. The net profit was at 177, and the net profit now is 301 crores. So company's sales have improved. If you look at the borrowings are also coming down. In fact, in March, they came down by close to 250 crores, and over here it's come down by close to 400 crores here. So that's also a good sign. If you look at the shareholding pattern, FII's holding has been pretty much stable. DIIs have also very little exposure here, but both seem to have added more positions in the last quarter. And as for the public holding, let's see if there are any big names. There are no big names. So a very large public holding as well over here. So this stock does look promising, but the fundamentals haven't really improved for the company. And it's already gone and made 600 rupees as its high one, and then it came down very, very quickly with a good amount of volume. So I'm not sure how much steam the stock has left now, although it did consolidate here close to the previous breakout zone for 4 weeks, and now it's gone up again. But I'm not too sure if this is a trade worth taking. I would only be comfortable taking a trade if it gives a closing above 521 rupees. Before that, I don't see any reason why we should risk our money in the stock. Moving on to Shriram City Union. Again, no real bullishness, has been consolidating since years in this one single price range. And the Nifty against all odds is close to 18,000, while this stock is trading at its 52-week lows, at its 52-week low zone right now. So better to stay away from this kind of stocks. CESC. Okay, I am not sure what CESE is. I haven't heard of this company before. Let's see what is compared. So it's Calcutta Energy Supply Corporation. Okay, so it looks like an energy company. Has been consolidating again since many years, since 2018, in this same price zone. Let's take a look at the fundamentals of the company to understand what's happening. Okay, ROC is 13%, which is good for a power company. Didn't expect that. Very undervalued. Industry P is 74. This is trading at a P of 8. Debt to equity is very high at 135%. That's not a great sign. Let us look at the book value. Okay, book value is also, it's not trading above, it's not trading very high to its book value. If you look at these pros here, which are listed. If you look at the sales have largely remained the same in the range of 2,500 3,000 crores. Net profit has also largely remained the same. If you look at the yearly results, then things do look a little better. So the price, the previous all-time high, not this one, the recent one, the previous one was made in Jan 2018 at 88 rupees. At that time, in 2018, the sales were at 10,275 crores. Right now, it's at 12,400 crores. If we look at the net profit, it was at 900 crores. At 1,300 crores. So a growth of 30-40%. And if you look at the shareholding pattern, then FI holding has been in the 14 to 13 range since the last 4 quarters. The DII holding has also been very stable between the 23 and 22 range. Public holding has increased a little bit, but again very stable at near about 12%. As of now, it's in a very tough consolidation zone. It tried to break out over here on 13 September 21, but the breakout failed and it came down again. So if we switch over to the line chart, the only reason to buy the stock would be above 94 rupees. Otherwise, we might get trapped. And the target in this case, if we look at the previous consolidation zone right here, so there are two resistance zones. One is this, which is the previous all-time high, and this, which is the recent all-time high right now. And if we stick to our strategy of calculating the depth of the entire consolidation, then the potential target can come to these levels, which is 140. Now I'm not going to add this add this stock in my tracker because the company's fundamentals don't look that great to me right now. I would rather stick to fundamentally much stronger companies which are growing and improving their margins, their profits, because those are the companies that will continue to outperforming the market. This has been consolidating since a very long time. It's better to avoid this. If we look at STL Tech, let's switch over to the candles again. Let's look at the last 5 years. Again, no momentum in the stock. Avoid right now. Krishna Institute of Medical Sciences is a recent listing, but it seems to be in some sort of an upward channel sort of a thing like this. So maybe if it comes to the bottom of the channel, it can be bought for the top of the channel. And if you look at the difference between the top and the bottom, so it's a good 30-35% gain could potentially be made if it comes to the bottom of the channel next. Right now it's a new IPO, so we don't really have too much data to go by, so better to avoid right now. Lakshmi Organic Industries, something interesting happening here. So here this stock has made a double bottom. This is the first bottom and this is the second bottom around this price as well. A breakout above this high between both the bottoms could lead the stock first to its previous all-time high and then beyond that as well. Now, because we don't have any real way to target think of the target beyond this point, I don't think we should risk our capital. But definitely this is a double bottom. A short-term trade can be taken here for a quick 15-16% gain to this previous high. But beyond that, I don't have any visibility. Also, the volume seems to be moving up over the last 2 weeks. So that's also a good sign. So definitely a short-term trade can be taken here. Moving on to fine organics, and wow, what a beautiful chart. What a beautiful chart. I mean, since its listing, it's just been on an uptrend with certain pitfalls in the middle, but the long-term trend, if you look at the monthly chart, it's totally been on an uptrend since a while now. So this is a good momentum trading strategy here. And if I zoom in a little bit here, it looks like it's making a pennant formation. Better visible maybe on the line chart. Yeah, as you can see here, it's consolidating inside this pennant form of formation. So again, this is a continuation sign. A pennant is a continuation of a bullish sign. So definitely I think this is a good entry for momentum players. If it breaks out of this pennant formation, enter it, keep holding it, keep riding this entire consolidation. And for a trading stop loss, what you can keep is the super trend on a weekly basis as a trailing stop loss. As you can see, this stock has been in a positive super trend since August 2020, right? It's never gone down. The super trend is also moving up consistently. So you can buy this over here and then continue holding it until unless the super trend turns red. If and when it does, you can book your profit and you can get out. So that's the view on fine organics. Moving on to Reddington. Reddington does look interesting. It's consolidating at its all-time high in this particular box. Needs to break out of this box for the up move to come in. Volume buildup is also good at this range, so definitely great volume buildup over here. So a breakout above this box can give you a potential gain of 23% odd right now. Plus it's made a huge gap up here in the month of May, so it's definitely in a nice bullish trend right now. It's consolidating here at its all-time high. If you look at the monthly chart, it's been consolidating in this price range since 1 2 3 4 5 6 7 8 9 months of consolidation, that too at its all-time high. So definitely I think there might be some sort of a continuation that might happen here. We have to wait for it to break out above 177 rupees. Moving over to Brigade. Wow. Okay, this chart looks really old. All right, what a beautiful chart. I mean, just look at this breakout that had happened here back in June 2021, and then the stock has doubled already since then. And now again, it's consolidating at its all-time high since the last so many months. Let's switch over to the line chart. And here, if we draw a rectangle, switch back to the candles. has been consolidating in this range since December last year. So 5 months of consolidation. Let's switch over to the weekly chart very quickly, and definitely something interesting happening over here. This is the entire consolidation range which has been trading in and looks really bullish right now. I'm switching over to the daily chart, putting in the moving averages, and the price is trading above the 200-day moving average, above the 100 and the 50-day moving average. So very strong chart. All the moving short-term moving averages have seemed to merge into one line. So a breakout above this could take it up very fast, very quickly. So your first target in this case will be just the depth of this consolidation. So 26% will be your first target, and beyond that it can go much higher. It can possibly again may double from its previous breakout zone easily. So I'm adding this to my tracker. This looks really interesting, really promising. Real estate stocks are doing really well. Brigade is a real estate company, so definitely a worth a look. The stop loss in this case will be somewhere about here, so 497 rupees. So let's add this to our tracker very quickly. Current price is 506.85. Consolidating in a box since 8 months at all-time high levels. Brilliant. 506.85. Our target, the first target is 698. Let's keep it 699 as a first target. Potential gain is 37%. Oh, sorry, wait. The target entry price is above this line, so that's 550 rupees is our target entry price. So yeah, a 27% gain. Our stop loss in this case will be 493. So a potential loss of close to 10%. Not very good risk to reward ratio in this trade. But the reason why I've taken this 493 as a stop loss is because within the box also, it's broken out of this consolidation zone and now it's consolidating here at the very top of the box. So if it breaks this low, then it can possibly continue to consolidate for God knows how many months. So, but we need to wait for a nice weekly close above this line and then we can potentially enter a trade over here. So this was a excellent find. I think Brigade can do really well over the next couple of months. Moving over to Cient, looks like it broke out from 2018, retested, went up again came down. I think it might have made something like a head and shoulder pattern here. Like this is the left shoulder, this is the head, this could possibly the right shoulder, and it could correct as per that pattern. However, right now though I don't see any real bullish momentum. It's been correcting since October of last year, making lower highs and lower lows. So not a really great sign. Better to avoid this stock right now. Let it give a closing above 1080 rupees and then there could be a chance of a good up move. Route Mobile new listing has been coming down. Looks like it made a double top pattern here. If we look at the line chart, then you can see this top and this top are very close. So this is like a double top M-shaped pattern it's made, and that pattern has broken down. A breakdown came above below 1800 and then the stock price has just been falling since then. So avoid as of now. Amber Enterprises, if we look at the last 5 years chart, now this is also again looking very interesting. So it's consolidating at its very top. If we look at the line, no, sorry, candlestick chart here, we switch over to the daily chart. It looks like a cup with handle pattern that's forming. Let's switch back to the weekly chart. So this is this would be the cup, and this is the handle, which is currently in formation. Now, as per this, then we have to take the depth of the cup, put it right on top of the breakout, and the potential target is 26%. What would be the stop loss in this case? The stop loss in this case would be this entire zone, which is at 3193. So from this position, the profit is 25% from this breakout zone, and the stop loss is 13%. Not really great. Again, risk to reward ratio. We have better trading opportunities. I think we can avoid this for now. I mean, if we look at the opportunities we found today, we have one in Chola Holding, which is like 47. We have HINDCOPPER, which can give 47%. There's so many other trades also over here which are still to be activated. So I think we can let Amber Enterprises potentially go for such a short target. I don't want to take a 12% risk for just a 25% gain. Plus this, there's a lot of inflation going around. Amber Enterprises, I'm pretty much sure that the operating margin would have been going down because of this inflation. Yeah, as you can see, that previous margins were in the range of 8 or 9%. That's at 6% right now. They seem to have gotten it under control in the last quarter. However, I'm not sure for how long that would last. So let's see if that works or not. Moving over, moving over to the next chart, Galaxy Surfactants seems to be making a lower high and a lower low. This could also potentially be a double bottom, a lopsided double bottom, but let's see. We will only get confirmation if it breaks this 3,200 rupees level. I don't see any chart pattern over here, so it could be a momentum play because the stock has been in momentum over the last 2 years now, and it's only started correcting since October last year. So maybe we can wait for the stock to reach momentum again. And looking at the last chart of the day, which is latent view analytics, very new listing. We have very little data to see what's happening here, so I'll avoid for now. Let's look at Lux Industries. Deeply corrected, no momentum as of now, better to avoid. Let's look at Balaji Amines. Now this looks interesting. I've also drawn a trend line here, this downward trend line, which it has broken out of last week, and this could directly go, I think, to its previous all-time high. Chemical stocks are doing very well. There, I believe there's an easy money here to be made with a 53% gain. So I am gonna, in fact, in fact, I already have a position in the stock, which is why you can see those markings already there. So I'm adding it to the tracker here. So just a disclaimer that I already have a position here, so my view could be biased. So please do your own due diligence. None of the stocks that we are discussing here are trading advice. Please consult with your financial advisor before making any investments. So the month is April. Today's date is 10th April. Price is 3403.90. Breakout from downward trend line can retest previous all-time high. Target entry price, we are going to keep the current price 3403.90. So yeah, and the target is going to be the previous all-time high, which is 5210. Potential gain of 53%. Our stop loss in this case will be, let's switch over to the weekly chart, will be the low of this candle, which is 3406. Sorry, 3046. Sorry, 3046. This trade is active. This is the current market price. We're going to keep the buying price of whatever we get tomorrow's closing price. We'll keep that as the buying price. I'll update it on the sheet. All right, so I think we have found good trading opportunities this weekend as well. Like every weekend, we keep finding new opportunities in the market. This time, in this session, we have found 6 trading opportunities. Out of these 6, we have 3 potential trades which can give a return of close to 50% and above. So that's good. And we have 2 short-term trades which could potentially reward us in a few coming weeks. So hope you enjoyed this session. Hope you got to learn something. And if you have any questions, do comment down below. And thank you for watching.